It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Tuesday, 16th of October edition. And it's my pleasure to be on Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon. Added those 2 extra days, the Tuesday and the Thursday, although it seems like I've been adding another couple of hours extra here doing sub work. And it's been my pleasure, of course, to sit in for Larry. And but 1 hour today, 11 o'clock till 12, I want to have a lightning round. I want to have, there's really not too much to say. I'm going to give you the parameters right now. I'll tell you what I'm looking for. The debate tonight should see the president come out strong. Very delicate balance between what's going to happen between Romney and the president. And most importantly is Candy Crowley, who, it's very fascinating. I've watched her over the years on CNN, and it's as if her heart is a Democratic heart. Her analysis leans towards favoring the Democrat side. But there's something else. She is a pro. She is the person that has been in the business a long, long time. And the sheer weight of giving the best report that she can give very often gives as a little text at the bottom, like a little asterisk, the other side of what she's really thinking, of what she's saying. So it's going to be really interesting because most people in the audience have no clue as to the kind of power that the moderator has. It's like a traffic cop. Now, I used to be a conductor. I used to conduct a chamber orchestra, and I had a chamber wind group. And you're really like a policeman because they're the players. They're the ones that produce the music. They're the ones that do. But you're able to just moderate the tempo sometimes. You can make them play louder or softer, but you can't play the part for them. So that's like the moderator. Moderator can say, oh, whoa, not even consciously, almost subconsciously say, whoops, going the wrong way. Hey, quickly get in a question here or cut them off or, things like that. So I'm going to be watching her very closely because, as I say, I think she's a real professional. And my gut instinct is that she's going to be, she's going to try to be as fair as possible. I don't know exactly what her leaning is going to be in terms of, because it's the questions, it's the audiences. This is where you get the most pathetic, I don't mean pathetic in bad, I mean pathetic stories of real pathos of people who've, lost their homes and their brother-in-law this and their mother and, it's a very delicate thing. And I'm not even sure they should ever have these town hall debate things in something as important as this, because real questions can't be answered. So it's going to be really fascinating. I'm intrigued. So now we're going to skip all that, and we're going to go straight to the Dow's up 108 at 30,532. The S&P's up 9, so the Dow's a little stronger than S&P. That's always interesting. At 1450, the comp index is up 19 at 3,083. Let me just check here for a second. So that's the comp index, C-O-M-P, yep, PX. And I just want to see the percentage because this is going to be it's quite important actually. So the comp index is up 0.63%. The S&P is up 0.76%. The Dow is up 0.82. That is very interesting. And now let's go on to now this is very important. Gold is up $8. It was smacked yesterday down between 22 and 24 intraday. At 1745, so it's up 780, and the silver's up 24 cents at 32.98. I must say, I'm still looking at the chart. I don't see a big smash to the downside, but I'm looking at lower lows and lower highs. That's just what I'm looking at. We've got high-grade copper is down 10 cents at 3.70. So now this is going to be interesting because why? Crude oil's at 91.70 cents, but the bonds are down a point at 148.13. They are still hanging in, considering the Dow is testing recent recovery highs. I have to tell you, I still got that feeling that the dollar, which is down 24 cents at 79.50. I have to tell you that I think that bonds are being propped up, that in reality, bonds should be much lower. And like the dollar is being kept down, so bonds are being propped up. It's really hard to how are you going to, I'm not sure I have the equipment or the wherewithal to be able to say categorically that that's happening. My gut feeling is quite often quite good. I think my gut feeling tells me that the Fed is in reality propping bonds up, bonds which actually want to go down, and they're being held up. So now let's go to the E-minis, because that's what I give my subscribers in my opening call, my very comprehensive daily report. There's a doji forming in the 120-minute candle at leg C. There is a chance, and I have to say that there's a chance because of the way the stochastic and the on-balance volume acted right at 4:15 this morning. Is that a phantom peak A, and we are now getting a doji type leg D where the stochastic and MACD are very good, but maybe turning around? I'm going to be very conservative. I'm going to say I don't want to push my luck there. Right now I've got leg C up. The 10-minute chart is in leg E. We're going to watch this real closely. A big breakthrough between above 1447.25. That's going to be very important. If there starts to be a consolidation over the next a little bit, there might be one more spike to a new recovery high, and then there might be some kind of pullback towards the close today. But so far, I have to consider this is very good action. And if you're looking at my charts, this is one here is the 10-minute E-minis. I want to show you something very important. If you look at, I've highlighted it here, WDAY, workday, that has been a fantastic IPO from the Friday opening where it gapped up and it started the day off, went to 48.59, pulled back to a low of 45.05 at 11:40 in the morning on the 12th, and then it ran up to peak A, B, C, D. This is the 10-minute chart. Then it went to a nominal new high, peak E at 53 times 3. It went 3 times, it hit 53 round number high. Then what often happens with these round numbers, you can get one more spike to a higher high, and it goes to a peak F at 53.50 at 9:40 this morning. The 16th, yep. And now it's pulling back in a sideways consolidation. I think this is a very interesting stock because it is one of the hot IPOs. I'm watching it closely because all I've got right now is a 10-minute chart. But if it had to pull back, and it pulled back quite sharply to 49.21, that area between 50 and 48.90, I think it would be interesting to have another look at it to see if it's possibly a good very short-term buy as a momentum stock. Now here's another thing. Using the ChapmanWave methodology, there's a certain technique, a series of techniques that I use, which says that there could be a left side, right side price-time match. What does that mean, a price-time match? Well, if you go to the left side, I have to change the color here. Go back to blue. There it is. Set as default. There we go. The left side high on the EUR-USD, the euro-dollar currency pair, the high at 11 o'clock on the 5th of October at 1.307. It pulled back. Actually, it had two moves like that. Oh, I forgot to talk about that. Look at this. This particular technique that I've developed over the years. Left side, right side price time match perfectly within one bar of the 120-minute bar, going all the way from the high of the 21st of September at 7 o'clock at 1.304. It pulls back to a low of, on the 30th, 1.28, and then it goes back in exactly the same price time match. Well, it misses it by 120-minute bar. Big deal. But it goes right back, and then it breaks above it to a leg D on the 5th of October at 11 o'clock, also 11 o'clock, 1.307. Then it pulls back again. It makes another cup formation. It goes to a trough on the 10th of October at 11 p.m. at 1.28. And then what happens? It goes to peak A, B, C, D. And what does it do? Right to the exact bar. It comes right up and it misses. It misses by, oops. There we go. It misses by 1.306.01 and 1.307.08. 0.001. It misses, hitting the left side high of the 5th of October. Now, these techniques I'm going to teach in my Master Trader series. Well, first of all, I'm going to review them and go through a whole bunch of new things with my Master Trader series level 2. That's for those who have done my 2-day seminar, live or webinar, the 2-day one of level 1. So this is a review plus all the new techniques and honing in on certain techniques. And they ask questions and we go through dozens of charts that show the exact methodology involved. So that's going to be very important. That's Thursday a week at Babson Executive Conference Center here in the Boston area, Wellesley actually. And that will be, if there's an early bird special. You sign up, you get fantastic discounts. Plus you get another month of my opening call if you don't get it, or 1 month free. Now, for the December 6th and 7th, Thursday and Friday, all-day webinar, I'm going to be showing these techniques in much greater detail because most of you have not gone through that, and that will be level 1. And there again, there are fabulous enticements, let's say, to join. You get a free webinar, you get my CD introducing the ChapmanWave methodology, etc. So look at this. Isn't this just a terrific technique, using the MACD stochastic, using the arch formation, or in this case the cup formation, using the technique I call the inside wedge, ChapmanWave inside wedge. So I just want to mention that. I wanted to show it. Let's move right on. We've got questions in the den because I had said that I would take some questions for a lightning round. First question, Ram in the den asked, Ram3 asked, NGVC. Now, this is a stock that we were interested in buying. We bought it at 20.59, just a small position back in 29th of August. I can't remember now if we took a tiny loss or a tiny gain, but we got out of it because we were stopped out of it. And then it went on to do what I was anticipating, went to peak EF, and then even that G, that rare leg G, the 6th highest peak. And what does it do? It goes to 25 round number high on the 4th. I'm going to be teaching about round numbers at lows and highs. I'm going to be teaching about the silent round number and the silent dojis. These are all techniques that I've developed over the many years I've been doing this. But the question is, what is it doing? And if you look at this, there's a potential here. Where's Rick from British Columbia? There's a potential left side, right side, head and shoulders pattern. So you've got the left where the peak is at on the 25th of September, 23.30, pulls back a tad and it skyrockets up to the 25 level, comes back down, and now it's making the right shoulder. I don't like this. I think this is going to test the 21 to 20.54 area over the next 2 weeks. I'll be right back. Basil Chapman, 877-927-6648.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Follow-up question from Rom is, he wants to enter it. I would be looking to enter NGVC, which is Natural Grocers by Vitamin Cottage. I remember when I put this on for my subscribers, I remember saying, you know, that name, how can you be a winner with a name that long? I mean, come on. Anyway, we'll call them Natural Grocers or Vitamin Cottage. I would look to start a position. Even if it rallied from here, I'd be a little bit careful. I'd prefer to say 2230. Rather wait for a test of the between 2120 and the 200-period moving average of 20.54. If it can form a base, then I would look for a base to take maybe 2 to 3 weeks. You know how Ken Shreve often talks about now it needs to build a base, especially when he's looking at that cup or the cup and handle formation. This is the exact opposite, that it's making an arch formation, and the arch says that it should come down, and somewhere in the late October, last week of October period, it could be testing the 21.5 to 20.5 area. I want to see how it holds that, because if it starts to break down and it goes anywhere into the Roman candle, another technique I'll be teaching, the ChapmanWave Roman candle, if it goes anywhere into the candle of the 13th of September, somewhere around 19.24, that's 3 points down. You say 3 points down, but I'm just saying this is what I'd be looking at. I'd have to wait even longer. But as a counter trend bounce with a possibility of between 1 to a 4-week rally, I would wait for a 2-week pullback. So I might be completely wrong because the monthly has made a very strong leg 8. It's an IPO. It only came out just recently. It came out in July, low of 17.20. But it's got a peak C in the weekly, and the weekly says that 2180 level is probably going to have to be tested. Now, I am wrong. If this starts to trade into the 22.80 to the 23.30 area, and the stochastic and MACD have started to turn around, then I'm going to say to you, hey, this could very well be on its way towards retesting the 25 round number high to make it 25.01 leg D up or higher. So at this point, I don't believe that that's going to happen. I've looked at this closely for a while. Everything about it says 21. The 21s is really the area that I'd start looking at it and let it build a bit of a base. Hope that helps you. There was supposed to be a lightning round. It was a little too long, but, I like to do things thoroughly. Now, I'm lucky in the den asked about the TWM. Now, the TWM is the inverse. It is the ProShares Ultra Short Russell 2000. If you don't mind, I'm going to go to the IWM, and in fact, you know what I'm going to do? Am I going to go to the white charts or the black charts? Just for the moment, I want to see what I've got on the white charts. IWM. I don't know if I've updated the 120. I have. So this is leg B in the 120-minute chart. For leg B to really, this is now I'm looking at the root, which is the long side, the iShares Russell 2000 Index Trust. There's a pattern that I drew in ages ago, and that's this gray support resistance zone. The big effort here on this rebound is to break away from the 200 period exponential moving average in the 120-minute chart at 82.39, 82.40, and right now it's at 83.21. If tomorrow at this time, and I'll be on, we'll be discussing it. There's a lot that's going on in the market anticipating a bunch of things, but because of the legs and the ChapmanWave, the way it works right now is that I'm not prepared to go short along any particular index. I'd rather stick with what I've been doing quite nicely so far, is to stay with the short side and the long side, looking at a bifurcated market rather than to get this juggling and wiggling that's going on every 2-3 days a different direction. So that to me is better. Now this is leg B in the 120-minute chart. If it takes out and then closes over 83.44, the high of 11:30 Eastern time on the 11th of October, I would say to you that it's raising the base, and there's a good chance that it will try to get to a leg D in the 120-minute chart. Now, where would it fail? If by this afternoon, the 83.33 high that we've just seen, let's say 83.42, doesn't get to the 83.44 level that I was talking about from the 11th. If it fails and it closes anywhere into the 82.70 area, that'll be very positive. Now, let me continue that thought because I want to look and I want to show you something really interesting. Charts repeat. Remember the chart I just showed you of workday, the 10-minute chart? Look, doesn't this look the same? We'll be right back. 877-927-6648. We're doing some lightning round as well. Dow's up 120, S&P's up 30.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com, where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, the Tuesday edition, and we've got a bunch of questions on stocks, and we're going to go right to what we were looking. We were looking at the IWM. The IWM is the Russell 2000. Where did I type it? Oops, I typed it in the wrong section. IWM, there it is. This is very important as far as I'm concerned. There's a trough E. It's used up time rather than price. It's at 83.22. It's up 58 cents. The chart itself on the daily. Well, let me just quickly go to the 120-minute chart. Oh, the 10-minute, the chart I was looking at before when I said, oh, look at that IWM. It's the same chart as the workday WDAY. That's because it was a chart of DWAY. I hadn't moved it away yet. So I was very consistent there. Now, I'd spoken about the 120-minute chart, but most importantly, if not today, but tomorrow at about 10:30 to 11:30, if there's another follow-through upside, very strong session, because of the debate or whatever it is, I'll be watching the IWM, because if the IWM has used up time rather than price, going from 86.96 down to 81.76, that's a 5-point. It's not even a, what is that? It's about a 7.5% decline. If it's able to smack that trend line resistance and then punch through it, so that it can get to the 83.66 area, 83.70, I will have to say that the the MACD and the stochastic and the on-balance volume are saying be careful, even if it's a counter-trend rally that takes the fast-moving average, the green line, this is what I'm going to discuss in my Master Trader series, just to tag the red line, the slow-moving average, and then reverse back down. That could, in fact, be a good number of points all the way to 84. So if you're in, I'm just imagining now, I'm not going to ask the question, I'm just going to do it both ways. If you're in the TWM, then what I'm going to suggest, because the TWM has made a peak, and I wanted to show this is why I wanted to go to the white chart, an A, a peak B, a peak C, a peak D, and this is a peak E. Peak E is where you can expect a much deeper pullback. So that would say that the support level is at 26.96, is the 200% short at 26.96. I personally, if I've made money here, I would be taking half off now. I might miss the big move tomorrow when the IWM plummets and the TWM skyrockets. But what happens if it closes underneath 26.83, the low of 4 days ago? If it closes under there, all of a sudden you've got the doji magnet at 26.86, 26.57. So it could pull back quite quickly, and the stochastic's going in an M-shaped down to the 80.98 level, still very good. That's why I said don't take the whole thing off. I would be considering taking a little bit off, and you can always put it back. Even if it gaps tomorrow to the upside, you can always put it back. So take some profits. If you have a nice profit already, these things, you know that when they make very quick moves to an A, B, C, D, even to an E, the pullbacks can actually be quite sharp. Now, what would be really positive is if by the end of the day, and that's why I'm saying, I would even tell you 26.88 is the low. At 26.87, I would take a little bit off. That's the way I would do it. I'd keep the core position because so far it's been a good trade, and the IWM has got a lot of ground to make to really break to the upside. So that's my stance right there. And what will happen is if it closes towards the high of the day, if it closes somewhere at 27, you said 26.96. If it closes at 27.17 or higher, and tomorrow there's a gap up, it could gap right past the 27.93 high of yesterday. So those are the parameters, and we just don't know. We're looking at some stocks acting very well. The Dow Quartet's starting to move. UTX is actually moving up today. This could be this could be a rally that lasts. I can't say right now. A lot depends on the VIX holding very low, bonds holding very low, and the dollar holding. And right now, I would say the bias at this point is to the upside, not for the TWM, but the IWM. Let's go to the next thing. Now, AUM. AUM is a stock that I see mentioned so often. Let me go to this chart over here in black. I've got it in black. I did some work on it because I always say, that looks like autumn. I don't know what it's even supposed to do. What is it called? It's called Golden Minerals Company. The way I'm looking at this, it's made a left side, right side, top at a peak D. AUMN is a symbol at 439, down 7 cents. Everything about it looks like it wants to at least test the 411 area. Between 411 and 380, there should be very strong support in the daily. Unfortunately, if you're looking at the weekly is saying not good action at all. It needs to climb above 493. It actually needs to climb above the 516 level. That's the 20-day moving average to really show that it's got the power to move higher and hold, because the monthly chart is terrible. Asking me, I would personally stay away from the stock. I have no bias towards buying it right now. The weight of evidence says that there's a lot of downside pressure. And then by the time it moves to the 480 level, I'm saying to myself, gee, it's only got about another 10 cents before it hits really strong resistance. So to my eye, I'm going to stay away. Next one is, let's see, TWM, AUM, CMG. Now, CMG, and this is also for Boston Mark, this is one that looks to me from the weekly chart and the monthly chart, upside is very limited. I suspect there's going to be just one sudden short covering burst, I hope there is, that takes it back towards the 310 306 to 312 level. I'm not sure it could even do that, and I have my eye on it to once again try to get a short for my subscribers so we can get, just some impact to the downside, because if it takes out 278, the low of the 5th of October, it's going to go right down to the 245 200 period exponential moving average. It really looks very poor. And CMG is trading at 294 Chipotle Mexican Grill. Now, another question I had was from Ken, looking at ACI. Sometimes you look at stocks and you just kick yourself. You say, I don't believe that I missed it. I looked at it. It was on my list, but it got sort of squashed. Let me do the white chart. It got kind of squashed in all the notes that I was having, and I had it as a potential short-term, not more than a short-term buy in my opening call, and I blipped it off. I thought, I'm not going to put it on now. I was very upset because it was down at the 650 to 660 area. Well, ACI is arch cold. It's had a fabulous move. I did this last night, in fact. No, I did this 2 nights ago. I drew this trend line from the high of the 3rd of July at 763. It drops all the way down to 516. It drops all the way down to 516. It was a $36 stock, and it went down to the $5 level. Anyway, at 515 it starts and goes to leg A at 776. Then it pulls back to the 9-period moving average. It goes to B at 778, pulls back all the way, but still above the 516 buy signal. It goes to 562, and then spirals up to a peak C and then pulls back. Within that peak C, there was another series of peaks. I meant to put them in this particular chart. I put them in the other. It goes A, B, C. I call that, I'm going to teach this technique. It is just a fabulous technique. It is, in my CD introducing the ChapmanWave technique, it's called the overlapping wave. From a previous peak, there is a pullback, and it's quite sharp, and it does take time. But then there's a brand new mini buy signal, an interior buy signal. So let's call it a mini buy signal. And that goes to a peak A, then a B, and then a C. But the C doesn't take out the previous C. That's called an overlapping wave. And what it says is that when it breaks C, on a percentage basis, it goes quite a lot higher. But it couldn't go all that much higher because I had already drawn the rectangle resistance level and the red rising trend line that should have been extremely strong resistance. And what does it do? The previous high was 805. Today it goes to 826 on a percentage basis. That's very good. That's what? It's about 13%. That's very good. Now look what happens. It hits 825, 826, and it pulls back. And the whole thing about this overlapping wave is that when you recognize it, you've got to say to yourself, hey, that's great. But when it gets to D, even though it could be a very strong move, I've got to be prepared that it's going to go back to or below the left side lip. I just gave you a lesson. I just gave you a really good look at one of the many, many techniques that I've developed over the years. This is one of them. This is the reason why the ChapmanWave with the notation, peak A to B to C, is very good. Now, you know what the market's saying? It's a little nervous about the debate tonight. It's saying the coal sector, which got a big boost from, Ken says it in the den, ACI getting benefit of Romney bounce. Yeah, the Romney bounce, and it's saying, hey, the market is rallying. And last time, as it realized that Romney was coming in and that Romney might, in fact, be the guy that pulls the rug from underneath Bernanke, that might be saying that this is not tomorrow morning at 9:30 or 10:10 or 11 o'clock. This is right at this moment. The market's bias is towards rallying, saying the same old could produce the same old, which has been a rising stock market. Ha! Isn't that interesting? Let me just go to the 120-minute chart. So that is A, B, 669. Nope, that's it. A, B, C, D, E. Brand new A, B, C, D, E. Peak F. Yep, I think that ACI is just going to cool off for a moment. I actually like it. Hey, let's have a look at you in. So if you're in it, I would take partial profits right now. I look to try to put them back at about, because the monthly is horrible, but the weekly is rallying, and it also stopped in the trend line resistance. Way more peaks of a trend line that starts all the way back from the candle of the weekly chart of the 1st of June of 2012. So the moment ACI, if it's able to break into, it's at $8 right now. If it's able to break into the 850s, there's a good chance that the candle of the 4th of May at 10:26, there's a chance that the low of that candle, that will be the body, that will be the open, which is 944. There's a good chance that the 920 to 960 area could become a target if that was the case. I happen to like this chart, so I'm watching very closely, and if it pulls back to the 736 area of the 9-period exponential moving average, I'll reassess and see if it's worthwhile. But I definitely missed, and my subscribers missed a really nice percentage move from about the 660s to today's high. I was waiting for leg D, and it got to leg D. Now we've got a couple of things that I want to look at. I wrote it down. Whoops, telephone call. AFL-CIO. Isn't that good? I'm a member of a union, the Musicians Union, being a member since, back in the early 70s. Still a member. Don't really participate in anything. I just get the newsletter and all. So that's them calling right now to say, vote for. I'll give you one guess. Who do you think they're going to say vote for? AFL-CIO. That's the Musicians Union. All right. So now what we're looking at is, I want to look at some of the stocks. For instance, some of the top IBD stocks. And this is one of the things I'm looking at. And I've called this a bifurcate. I've called it, on Wall Street they've called it, and I agree, a bifurcated market. Alexion, pharmaceuticals, cancer, autoimmune, hematologic, just the works, drug development research, had a spectacular move, walked the 9-period exponential moving average since it broke above back in June of 2009. It's gone from a low of $14 in November of 2008 to the most recent high of 119.54. So by any measure, this is a very steady move, but it is an acceleration to the upside. But if you look at something like a weekly chart, it looks like just a steady move. It's gone beautiful. If you want to do this in terms of an Elliott wave, you've got your leg 1, goes from the most recent low of the week of June 24th at 43.78 to peak D, doji high, doji low to doji high. I'm going to teach about these candles. Don't forget, Steve Rhodes has a workshop coming up on Friday on candles and some other techniques. Please go to the front page of TFN and check it out. Check out my live seminar a week from Thursday, level 2, and my webinar on the 6th and 7th of December. Now, look at this. Doji on October the 28th pulls back, makes another doji low on the 25th of November, week of the 25th of November. This is a weekly chart. To make a doji in weekly so many says that there were moments of indecision. But the bias, a major bias based on technicals and the 9-period moving average, took it all the way to another peak D. And that peak D was March the 30th, the week of the 30th at 95.01. Pulls back to another candle. And it goes to another peak D, the third peak D. I'll be back. Basil Chapman, 877-927-6648. Hey.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Thomas Edison didn't invent the light bulb, he made it better. As the fourth most prolific inventor, Edison found that most people failed because they failed to realize how close they were to success before they gave up. Success requires a few disciplines, practice each day. When it comes to trading and investing, one of those disciplines is understanding and acknowledging the language of the markets. For centuries, Japanese candlestick charting has unlocked the hidden treasures of the language of the bulls and the bears, the buyers and the sellers. Candlestick charting is a tool, not a trading system. Candlesticks tell you when to enter, when to exit, and identify the risk and reward for every trade. Candlesticks identify market turns before they happen. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, and on Friday, October 19th, I'll be conducting an online, one-day course teaching you the secrets of Japanese candlestick charting. Go to the homepage at TFNN.com and sign up today, because candlesticks will make you a better trader.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, Basil Chapman, just as we go through our last segment, let me quickly finish up on this, and then we've got a caller waiting. I'll be right there. If you're looking at Tiger TV, Tiger One, remember, these things are all archived. I believe I'm... would I be 11? Yes, I'm 11, because I'm at the 11 o'clock hour. So Tiger 11 is where you can review all these charts. If you're looking at this white weekly chart, white background weekly chart of Alexion Pharmaceuticals, just semi-close your eyes and just follow that maroon line that says, oh, this has just been a fantastic... It's literally, this expression that I use, it walks the 9-period exponential moving average. But now look, the stochastic is lower, much lower than it was at the previous peak D high. The MACD is turning down. Look at the RSI. That's the little thing I've just highlighted there, the relative strength index. This says the upside for this stock might be very limited here, and be careful, because if it takes out, it's at 111.49. If it takes out, if it closes under 106 in the next week, I would have to say that the good days for this are probably over, at least for now. It could then, the weekly chart is still very strong. It could have a big bounce, but it's gone from 119 down to 119.5 down to the most recent low with a double bottom at 110. So this is the area, and I've highlighted actually 107.50. If it goes under 107, give you the exact number here, 107.40 in the next week, this thing's saying, hey, I need more time before I can do anything. So I just wanted to highlight that this is one of the many IBD top 20 stocks that are having a tough time here. Some are still doing great, but a number of them are not so great. Let's go to Ari in Arcadia. Hi, Ari. How are you?
I'm doing very well, Basil.
You wanted to look at?
Basil, I guess, from Brazil.
Valley SA?
Yeah.
Okay, yeah, I remember the stock well. We had a number of people in the den who made quite a lot of money on this, and one person in particular, Sam from Newfoundland, used to did a great job on Vail, and he used to trade it all the time. So I know the stock historically very well. I've been looking at it lately, and I don't know if you've done any work on the monthly. It says it's at 43.96. In May of 2008, that was a peak F-top. Plummets down to where? The 200-period moving average. Goes to a doji peak E-high, January of 2011 at 37.25. Where does it come down to? The 200-period moving average, 14.81, and it went down to 15.80. Missed it by a point. Now, it's starting to show signs in the monthly chart that it's trying to turn around. The weekly chart is the one that I'm looking at. I bet you're also looking at that very closely, right?
As well as the daily.
And now the daily says it's in leg B. Are you in the stock?
Yes, I am. I went in at 17.75.
Okay. Now, the actual low that I want to pick is the low. And this is what I call a retracement mode, because the last high went from the low of 15.77 on the 4th of September, and it went to a high, double top high at 19.76 on the 14th. So this is one of those things that almost looks like the inside buy signal that I had on the stock we were looking at just now, which was what? The IWM? No, what was it? Whatever I was looking at. Right. And I said there was a peak C, and now you've got a little mini one, which goes to... So this is a gray B. So far, I like what I see. There are two things that you've got to consider. That there's a lot of selling that's been going on. So any pullback, there could suddenly be a quicker pullback, because my guess is that it's heavily shorted. That makes the upside really intriguing, because if it takes out the 19.76 high, it doesn't even have to close above it. If it takes it out, suddenly the weekly is really looking like it wants to test the downtrend line, and that downtrend line is 19.88. So I like your trade. I think it's very good. I'd have a little bit of a stop in some part of your position if it suddenly closes in the next week underneath $18.20. I think you've got a nice pick for a trade. I don't know yet if it's going to be an intermediate term trade or a short term trade, but so far it looks very good. Watch that level of 19.76 in the next week. If it takes it out, that's very good. Thanks for calling, Ari.